good morning. And thank you all for being here after last night. Some of you went out, me included, and here we are today, firm. So Buddy asked me kindly to come and make a very short presentation of things that are impacting our business in the U.S. or the region. So for those of you that don't know me, I'm a proud founding member of this fine community. Thank you, Buddy, for these 9 long years where we all have kind of grown old together in many ways. So we're an MVOCC with headquarters in the United States. We have offices in Venezuela, which, by the way, is open for business again after 25 years of hell. So it's open for business. And we also have a branch office in Spain. And of course, now we are eyeing Cuba as another place that could potentially open for business coming soon. Some of the things that we want to talk about is what are things that are really impacting us as a freight forwarder in the U.S. And the things that really come to mind are tariff, geopolitics, and artificial intelligence. Those are the things that everybody's talking about. So we're going to be talking a little bit about it. The new reality is that tariff, it means more cost to the operation. So if we think of places like Brazil, they've been hit with a 50% tariff. So imagine doing business as you used to do, now throwing in 50, 30% more cost. So definitely more cost equates to more risk. And that's the biggest problem that we're seeing right now. The risk to do business because the capital requirements are a lot larger today. So some of the things that we're seeing on clients' behavior, like the large buyers in the United States, they're changing the Incoterm they're doing business with. So they're moving more into DDP or LDP Incoterms, and that puts a lot of capital pressure on the upstream of the supply chain. So basically, the Costcos or the Walmarts of the world are saying, if you want to sell to me, you got to deliver to my door. The tariff risk is your problem. And this is very complex for a small Bangladeshi manufacturing plant, because now they need to have more capital to produce the goods, cover costs of transportation, the duties. They need to make entry in a foreign jurisdiction, and the cash cycle is a lot longer. So capital is a big, big problem for them. And of course, we as a freight forwarder are dealing with the clients that this is the hidden problem. We are financing their transactions. Does that sound familiar? Any of you have to give credit to your clients, right? If we don't, we're dead, yeah? So the biggest thing is that forwarders are always pushed into credit mode. And kind of, if we don't give credit, we don't move the cargo. That is the motto, right? But the question is, how is it that we're doing those decisions into extending credit to our clients? I see the credit application that we send to our clients, and typically all we ask for 3 references. And that really doesn't say anything about financials, at best character, but we got to do a better job, because then one single client that doesn't pay us wipes month of margin. So just to be clear, let me see a show of hands. Who has written off $10,000 in a year of bad debts? Don't be shy, all of us. How about 50,000? I've been there too. How about 100,000 in a year? All of us. So this is the thing that we as forwarders extend a lot of money out, and we're not doing a very good job at determining worthiness, right? Think of if you go to buy a car, you go to the financial department, they ask you a lot of stuff before they can determine whether you can service that debt. In many cases, we're extending terms to our clients 100,000 or more, and we're not doing a very good job at determining creditworthiness, because really, that's not our competence. That's not our main mandate, right? Our main mandate is to move goods from point A to point B, efficient, compliant, on time. But creditworthiness is something that is hitting us very hard. So how could a freight forwarder determine creditworthiness? It shouldn't be by intuition or, if this is a good guy or simply because it's going to give me more cargo. Typically, those are the decisions that we make. If the customer is going to give us more freight, I got to give him more credit, right? But we should really be doing underwriting like a bank would. But once again, it's outside of our understanding in many ways, yeah? So here we come on artificial intelligence. It's something that we always talked about, and is AI is going to take us, it's going to replace us, whatever. We took a decision to embrace the technology, and facing the problems that we had extending credit to our clients, we created this application, which helped us underwrite credit from a freight forwarding perspective, and most important, it gives us the ability to give our clients lines of credit to purchase inventory. And this is a game changer, because if the problem with tariff is capital constraints, now we're bringing in capital to our clients. And believe me, once you bring the capital to your clients to procure goods, you are the best friend. And no competitor will beat you over $100 margin, because the liquidity to purchase is really a deal breaker. So I encourage you to think of out of the box into creating added value to your clients. And if you want to learn how to do this, this is something that we created for ourselves, but now it is available to all of you, and talk to Bari to include it into offerings for you. So that's all. Think of it, risky times, capital constraints. Make sure that you do good jobs on the writing, and create a new revenue stream by offering your clients. Thank you.